An intangible asset is an asset that is not physical in nature, such as patent, brand, trademark, copyright. Goodwill is the good name of the firm. It is an extra earning capacity of the firm over the normal profit. Peace and stability in the area. Which area the business is in, whether the area is stabilized area and the peace area, no problem at all, that you have to look after. Hello my dear student, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, MYSURU. Today in this session, I am going to hand Corporate Accounting 3rd semester, Unit 3, Session 1 in favor of BCom, and I am going to handle in this session Valuation of Intangible Asset. So it's a third unit. Valuation problems will come, 10 marks for goodwill. Here, what are the valuation of intangible? First, I have to say what do you mean by intangible asset, what is the need of intangible asset, which contains the intangible asset. I am going to explain now. Slowly move. Intangible asset. An intangible asset is an asset that is not physical in nature, such as patent, brand, trademark, copyright. These are all called intangible asset, even goodwill. Then, business can create, acquire an intangible asset, which cannot be seen and touched, but we can acquire. Since intangible assets have got no shape or form, they can't be held or manipulated. We can't hold them or we can't manipulate it because it's an intangible asset. An intangible asset can be considered indefinite, a brand name, for example, or a definite, like a legal agreement of the contract. It's only a contract between the parties. It's an intangible asset which cannot be seen and touched. Intangible assets created by company do not appear on the balance sheet and have no recorded book value. It's an intangible asset cannot be shown in the balance sheet as a real asset, but it's a created. The need of valuation of intangible asset. To determine the value of the asset, what is the value of the asset? We are going to determine improving the accuracy and reliability of the finance communication. If you want to improve the financial communication, you must have intangible assets, trademark, patents, and copyrights. Everything should be there. Improving and diversifying assets of finance. Determine the correct value of the intangible asset for taxation purpose, transfer pricing, and taxation. In order to make what's called taxation purpose, the intangible assets should be valued properly. Merger and acquisition, improving the diversifying the assets, financial impairment testing. So it plays an important role in taxation purposes, in valuation of the asset, in reliability of the finance corporation. In intangible asset, we are going to read the major chapter called goodwill, which is going to come for 10 marks. Goodwill is the good name of the firm. It is an extra earning capacity of the firm over the normal profit. Whatever the regular profit is there, if you have got a good name, we can earn more profit. Goodwill is the good name or well reputation of the business. It helps the company to attract more customer. If you have got a more goodwill, naturally it will attract a more customer. It helps the firm to earn more profit. It is an intangible asset. It's an intangible asset means which cannot be seen and touched, but it is there. When you go to shop, you can't ask, give me goodwill, because it's an intangible asset which cannot be seen and touched. It is the present value of the firm and is very excess earning. The excess earning of the company depends upon the goodwill of the business. Factor that determine the amount of goodwill. What are the factors? 5 marks question they are going to ask. 2 marks they may ask. Or 10 marks they may ask. One is called location factor, where the company has been located. Then time factor, how much length of the time the company is running is most important. Possibility of the competition, how the one company face the another company. Money market condition. What is the condition of the money market? Government encouragement and protection. How much government is helping this company to improve it? If the government help is there, definitely the company will come up. Peace and stability in the area. Which area the business is in, whether the area is stabilized area and the peace area, no problem at all, that you have to look after. Then efficiency of the management and employee. How the management works, how the employees work also depends upon the determination of the goodwill. Nature and future prospect of the business. These are the factors you have to consider. Then they may ask this question also. Factor affecting or influencing the goodwill. Which is the influencing the goodwill? One is past profit of the business. Next, nature of the business. Number 3, location of the business. First one, past profit of the business. Second one, nature of the business. Number 3, location of the business. Number 4, efficiency management and employees. Number 5, earning capacity of the business. How much are? These are all you have to think into one. What are the points are? One is how much profit the firm earns in 4 years, 5 years, 6 years, 10 years, 20 years, 25 years. Nature of the business, which type of business they are doing. Location, business, where it was located. Efficiency of the management, how the management work, how the employee behave in the company. Earning capacity, how much companies are earning every year is the most important. So in the, what's called a newspaper, you can read like this. When you compare to last year, our turnover is for 5 crore. This year, our turnover becomes 7 crores, means so earning capacity business has been improved. So it will attract the customers. We'll move on the problem. Before going to problem now, this working note you have to understand. So you have to find out super profit. What is super profit? Average profit minus normal rate of return. What is average profit? Total profit divided by number of years. If 4 years profit is given, add the 4 years profit divided by 4. If the 5 years profit is given, add the 5 years profit divided by 5. If the 4 years profit, 1 year loss is given, add the 4 years profit, deduct 1 year loss divided by 5. Then normal rate of return, they will give the capital employed into rate. Maybe 10 means 10 by 100, 12 means 12 by 100, 15. Then average profit minus normal rate of return. Annuity method, super profit into annuity value. Capitalization is a super profit divided by normal rate of return. These are all the things you have to understand slowly. Move with the problem now. From the following detail, find out the value of the goodwill by super profit method, annuity method, capitalization method. Capital employed is 1,50,000. Normal rate of profit is 10%. Present value of annuity is 4.25. Net profit for 5 years is so how much? Goodwill 5 years purchase of the super profit. First we'll calculate total profit for how many years is given? This is 5 years. What are the profit are? 24,500 plus 15,500, 24,500 plus 15,500 plus 16,500, 3 years over, plus 17,500 plus 18,000. This is profit of how many years? 5 years. We'll add this profit now. 24,500 plus 15,500 plus 16,500 plus 17,500 plus 18,000, 92,000. So 92,000 is the total profit. Average profit $92,000 divided by 5 years. 92,000 divided by 5 years. 18,400. This is average profit. Normal rate of return capital employed into rate divided by 100. What's your capital employed? 1,50,000. 1,50,000 into 10 by 100. It is 15,000. 1,50,000 in 10 by 15,000. Super profit is equal to average profit minus normal rate of return. What's your average profit? 18,400 minus 15,000. How much more? 3,400. This is your super profit. How many times? Goodwill is equal to 3,400 into 5 times. 3,400 into 5. 17,000. This is as per super profit. First, you have to calculate total profit, average profit. Normal rate of return is 1,15,000 to 10, 15,000. What is super profit? Average profit minus normal rate of return. 3,400. Goodwill 5 times. Now, annuity method. Is equal to super profit into annuity value. What's your super profit? 3,400. Into. What's your annuity value? 4.25. 3,400 into 4.25. 14,450. Then, capitalization method. Super profit divided by normal rate of return. What's your super profit? 3,400. What's your normal profit? 10%. 0, 0 cancelled out. 34 followed by 30. 34,000. So, capitalization method is super profit divided by normal rate of return. Normal rate of return is 10%. 10 into 100, it will come 34,000. On 34,000, 10% is 3,400. So 10 marks question. First one they will ask super profit method, then they ask annuity method, then they ask capitalization method. We'll move on to next problem now. Second problem. The net profit of business after providing taxation for the first 4 years is the profit of the 5 years is given. The capital employed in the business is 5 lakh. The reasonable rate of return is 15%. This is important. Calculate the value of the goodwill on the basis of 5 years purchase of super profit, annuity value 2.011, and capitalization method. So we'll move on. Total profit for 5 years, 80,000 plus 90,000 plus 80 over 87,000 plus 1,07,000 plus 1,16,000. Add 80 followed by 30, 1, 2, 3 plus 90,000 plus 87,000 plus 10730 plus 116 480 followed by 30 480,000. Average profit first add the 5 years profit. The total profit comes 4,80,000 for how many years? 5 years divided by 5. 4,80,000 divided by 5. Normal rate of return capital employed into rate. What's your capital employed? 5 lakh. What's the rate? 15%. 5,75,000. So we expecting from the firm, if I invest 5 lakh, I must get 75,000 every year. So super profit average profit minus normal rate of return. What's your average profit? 96,000 minus 75,000. We mean to say that we required only 75,000 only, but we are getting 96,000. How much more we have to calculate? That is your super profit. 96,000 minus 75,000, 21,000. What is 21,000? Super profit. How many times? 5 times. Goodwill. 5 times 21,000. 21,000. How many times they ask? Goodwill. 5 years purchase into 5. 0, 0, 0. 5 ones are 5. 5 twos are 10. 1 lakh. This is as per super profit method. So first Add the 5 years profit, divided by 5, it will come 96,000. Average, generally we get profit. Normal rate of return, whatever the capital employed is 5 lakh, 15% is 75,000. We mean to say that we require only 75,000, but the profit earned is 96,000. How much more? 21,000. So 21,000 excess profit, goodwill 5 times the super profit, says annuity method. Formula: super profit multiplied by annuity value. What's your super profit? 21,000 into, as per the problem, what's your annuity value? 2.011. 2.011. 42,231. 42,231. 42,231. Last one, capitalization method. Capitalization method. Super profit divided by normal rate of return. What's your super profit? 21,000. 15%. 21,000 divided by 15 into 100. 140 followed by 30. 1,40,000. Your super profit is 21,000. Normal at 15%, 15 into 100, it becomes 1,40,000. This goes in favor of capitalization of profit. We'll move on to the next problem. Third problem. Capital employed is 6 lakh. Normal rate of return 10%. Present value annuity is 3.78. Net profit for 5 years. Same method. Total profit for 5 years. Add the profit for 5 years. 57,000 plus this over 61,000, this over plus 67,600 plus 69,600 plus 71,600. Add 5 years profit. 57,000 plus 61,000 plus 67,600 plus 69,600 plus 71,600. 3,26,800. Check once again. 57,000 plus 61 followed by 30 plus 67,600 plus 69,600 plus 71,600. 3,26,800. Average profit 5 years. 3,26,800 divided by 5 years. 3,26,800 divided by 65,360. Now, this is your average profit. Normal rate of return so 3,26,800 is the total profit for 5 years. Per year it becomes 65,600. Normal rate of return. What's your capital employed? 6 lakh into 10%. 60,000 means we require only 60,000, but your profit is 65,360, means 5,360 is the super profit. Super profit average profit minus normal rate of return what's your average profit? 65,360 minus 60,000, 5,360. How many times? 3 years purchase price. 5,360 into 3 times. 5,360 into 3. 16,080. This is as per super profit method. Then we'll go to annuity method. Formula. Super profit into annuity value what's your super profit? 5,360 into annuity value 3.78. 5,360 into 3.78, 202.60.8. Capitalization method. Super profit divided by normal rate of return. What's your super profit? 5,360 divided by what's your normal rate of return? 10%. So 0, 0 cancelled out. 5,360 followed by 0. 53,600. It is 5,360. Every problem is doing the same thing, but very easy now. So last problem now. Fourth one. The net profit of business providing transaction for the past years, first year, second year, third year, fourth year, fifth year. Capital employed is 12 lakh, 12%, same method, 4.75. What is the first one? total profit for 5 years. One by one. 1,60,000 plus 1,70,000 plus 1,80,000 plus 2,10,000 plus 2,30,000. Add 5 years. 160 followed by 30 plus 170 followed by 30 plus 180 followed by 30 plus 210 followed by 30 plus 230 followed by 30, 95 followed by 40, 9,50,000. Profit for how many years? 5 years. Average profit $9,50,000. How many years are there? 5 years. 9,50,000 divided by 5, 1,90,000. That is your average profit. Normal rate of return, capital employed into rate, normal rate of return. What's your capital employed? Come back here. 5 years purchase. The capital employed is 12 lakh. What's the rate of return? 12% annuity value, 12 lakh into 12 by 100. 12 lakh. 12 followed 5 by 0. 1, 2, 3, 4, 5 into 12 divided by 100. 1,44,000. Normal rate of return. Super profit is equal to, what's your average profit? 1,90,000. What is normal rate of return? 1,44,000. 190 followed by 30 minus 144 followed by 30, 46,000. Excess. How many times they say? 5 years purchase, 5 times. So goodwill is equal to 5 times the super profit, 46,000 into 5 times. 46,000 into 5. 230 followed by 30. 230 followed. 2,30,000. This goes in favor of super profit, annuity method. Super profit into annuity value What's your super profit? 46,000 into. What's your annuity value? 4.75, 46,000, 46 followed by 30 into 4.75, 218, 500. 218, 500. Last one, super capitalization method. Super profit minus normal rate of return what's your proof of profit? As per the problem, your super profit is 46,000. What's your normal rate of return? Normal rate of return is 12%. So 46,000 into 100 divided by 12. 38, 3, 3, 3, 3.33. 46,000 divided by 12 into 100. So it will work 3,83,333. So I solved about the 4 problems. All the problems contain, one is super profit method, another is annuity method, another capitalization method. What is super profit method? Average profit minus normal rate of return. What's the average profit? Total profit divided by number of years. What is normal rate of return? Capital employed into rate. The excess is called super profit into number of time. What is annuity method? Super profit into annuity value. What is capitalization method? Super profit divided by normal rate of return. Public examination, they will ask one question which contain all the 3. Hope I solved about the 4 problems of the same type. Hope you'll understand. Definitely it will help you from the coming examination. Please go through 2 or 3 times, can understand. Best of luck in the examination. Hope you understand this one. We'll meet in the next session with a balance sheet. Till then, goodbye.